Mark, how are we doing?
I'm good. How are you guys?
Okay, did you jump through all the hoops of our technical onboarding process here? You follow all the docs?
Tried to, yeah. Microphone was working, wasn't working. Then we just started talking about Kevin Rose, Jack Dorsey, entrepreneurship, all that cool stuff.
Oh no. All right, so Caesar is a deep research assistant powered by AI and backed by crypto. You guys were launched, I think, a month or two ago with your Caesar token, and have recently partnered with Centrifuge to offer the first on-chain equity issuance by a crypto native company. Interesting. Okay. Okay. So I have so many questions, but let's at first lay the groundwork here. What is Caesar? What's sort of the gap in the world that you saw and that Caesar has stepped you into?
My connection really bad. My Starlink. That's my
All right,
Starlink.
you're good.
Oh,
You're
I
good.
thought my
You're good.
Starlink was spinning. I saw like a black error screen. Shout out Starlink, by the way. What a great company. So yeah, Caesar started. This was during the days where there were no web search tools for any AI inference. So like, when we were calling ChatGPT and asking about crypto, I had no idea about anything. Right? You could ask who's Lawrence Day, and it would go off and talk about some random doctor, not the Lawrence Day that we know, and it had no real time context. And we set out post exit of my last startup to build an AI and a data company. My background is in data engineering, data science. That's what I've done for the last 10, 15 years. And we built this awesome API that you called once and you could ask about anything crypto related, and it brought it into the context window of whatever LLM you're using. So really simple. In fact, our demo was just that. It had like Claude Sonnet 3.5, and then adjacent to that it was Caesar, which was just Claude Sonnet 3.5 with crypto data injected. And we raised a round of investment to build this crypto data aggregation platform, and we'd go to Nansen and Masari and Amber Data and TARDIS and all of those guys and bring it together, make it really easy for anyone to build an AI XBT. That's how we started. And very quickly, all of the AI providers started to add web search and tools and caught up to that mo. And it was like, oh dear, us, Perplexity, and a whole bunch of those guys are going to go out of business quite quickly. And we realized that the core value proposition we'd created was actually the data engineering pipeline. Like nobody wants to build data lakes or data warehouses and manage aggregating APIs. And we had taken a somewhat novel approach to how we were doing that, because from the ground up, we were architected in a way that meant we have to circumvent these arbitrary context window limits for any LLMs. And back then it was like 20,000 tokens. It's not like 2 million today. So we built this really, really, really powerful data pipeline that could take vast amounts of information and condense it into the smallest possible snippet to pass at inference time to an LLM. And very quickly, it became apparent that we'd built something that was useful in a very generalized sense across many domains. It wasn't just crypto. In fact, it was very good at everything else because crypto is really difficult to get right. So interestingly, it just propelled us everywhere else. We started benchmarking against some of the sort of like deep research and deep search benchmarks that existed, and were performing very, very well. So I guess you could say now Caesar fits in that niche of anyone who's curious and is trying to be the best at whatever the best is to them, whether that's cutting temps off a lap around the circuit, cooking the best meal on Thanksgiving, finding the best deal on Black Friday, or you're at the forefront of research in chemistry, etc.
Okay, so it is. I mean, you're going head to head with ChatGPT, Gemini.
Mostly Perplexity. If you had to say to me that I'm your investor, who's your biggest competitor? It's Perplexity.
Okay. What do you see as the opportunity that both you and Perplexity are going after that is sort of differentiated from OpenAI?
Yeah, I think Perplexity is going more after search and that temporal relevance of like immediacy. So finance, and they're again struggling to find their niche in particular. Mm-hmm. We're leaning more into the developer side of things, which is interesting. We're seeing that most of our usage, like 90%, is using the API. And
so you're like Anthropic. Anthropic is to OpenAI as Caesar is to Perplexity.
Yeah, in many ways. Sonnet 4.5 came out yesterday, and I think on the timeline people say it's not quite as good as GPT 5.1 or Gemini Pro 3 at this. Anthropic don't care. They've got me and every other developer paying them $200 a month for their Claude code. They're really happy in their niche of making sure that every developer in the world is using their models, and I think like they feel comfortable there. For us, like deep research and deep search APIs are awful. Like, just across the board, they're terrible. Perplexity is the best one that exists. It's prohibitively expensive. It isn't particularly good at deep research, and all of the other tools that exist aren't great. So I think that's why developers are banging down the door to use our product. And because we're a startup and we're in that early stage, that kind of took us by surprise as well. I didn't think we'd have as many developers wanting to use our product as we do. It was more an afterthought, ironically. We're all developers. We built that product because we would maybe use it, but it's our primary growth tool right now.
Is this not something OpenAI is kind of inevitably going to build in the next year? Is kind of the data pipeline, data lakes, et cetera, something you just don't think they're going to?
I don't think so. I think they're a frontier lab company that will build foundation models, and they'll be going head to head with the Groks and the Geminis of the world. I think those three companies, and throw Anthropic in there too, will comfortably be leagues ahead of anyone else. We're built on open source models, so we use inference across the board, mostly open source. Ironically, the Chinese models now. Back when we started, it was all Llama models, so we were on like Llama 3.1 and 3.3. Now we use Qwen. And the reason we use open source models is actually because if one of our inference providers goes down tomorrow, we want to make sure that we still have a stable level of service and we don't have a single point failure.
Okay, so help me understand the decision to launch a token and what you see that unlocking for you.
God, this is an interesting conversation to have now. Actually, when we raised our first round of investment, it was friends and family, mostly myself. I'm very fortunate in that, again, like, because I've had a couple of exits and I've been an entrepreneur for a while, I've got a good network of individuals who would back, I think, most things that I would do. So we raised around $2 million back in sort of January, February of this year to have a token for a crypto data aggregation product. And it became apparent towards the beginning of summer, the end of spring, that we were going in a slightly different direction. But then we had 267 individuals who I'd taken money from to build a business, and we'd said we would launch a token. So we kind of went deep down the token path because we said we would launch a token, and I thoroughly believed that it was the right thing to do to follow through on that commitment, and that we would figure it out, that we would be able to figure out a solution that worked for everybody involved, where the value accrual would go to the token in some way. And again, it became clear that we're not hyperliquid, we're not pumped up fund, we're on the edge of profitability. We're never going to have massive amounts of free flowing capital to just buy this token back and create an ecosystem of buybacks, which I think is the trend right now. And again, we couldn't think of a way to plug the token into the product that wouldn't degrade the product. And we've seen this in our early alpha. You know, charging $1 to access a product to go away from a free trial, your drop off is significant.
Yeah.
After you load a token, oh my God, it's
micropayments. Tokens make micropayments better. It's just going to make the whole thing easier, right?
Well, I would disagree with that. Having said, it's like the worst form of if you want to keep your alpha small, gate it behind some tokens, right? Because you'll have the thousands of people in crypto who hold these tokens using your product and no one else. And we see this. We have these free weekends where we just open it up, and growth goes exponentially through the roof. And that's just because, despite how big we think our space is, it just isn't. There's far more users outside of crypto wanting to use a product like Caesar. So it didn't make sense. Token doesn't make sense, but hey, we've got one anyway. We've said to 267 of my closest friends and investors that there would be one. So we have this token now. It's up to us to figure it out. And it became quite clear that the regulatory framework, at least in the US, was evolving such that it enabled us to explore tokenized equity. I think there are companies like Galaxy, and there's a plethora of these platforms now that tokenize stock, whether it's through sort of SPVs or SPACs or whatever. Mm-hmm. And Centrifuge and a whole bunch of their team were early backers of Caesar. And we had the conversation with Anil and the team there of, okay, can we do this? Is this something that you think would be possible? And obviously, you've got the lawyers involved, and they said, well, this isn't, this is, this isn't, this is. And it's really been a balancing act of how much regulatory risk do we want to take? How much regulatory risk are we permitted to take? And what does that look like? So for us, it's getting to a model where the token represents real ownership. not Mickey Mouse ownership of saying it's like some token 1% equity with, no economic rights, no governance rights. It needs to be meaningful ownership in a regulatory environment that has full economic, full governance rights, and ensures that all of the individuals are protected with, minority rights protections. So we can't just dilute it down and say, actually, now this is worthless because we want to bring in VCs and you guys have forgotten about. And to me, that feels like the right pathway.
Okay, so we need to get into how here. So you have a liquid token out there. I think looks like you did an airdrop, created markets.
Yeah, there was no airdrop. So it was all of the tokens. And again, we wanted a very different token structure. Okay. I hate high FDV low float tokens.
Okay, so you have a fully distributed token here. I see.
Fully distributed. Day one, there were no lockups anywhere for anyone. And most of the tokens were sold in a private sale. Again, I regret that they had to be sold in that private sale to friends and family, but we couldn't put a web page up and exchange money for a token, right? Like we just can't do that.
Okay, so
in an ideal world, yeah.
Token out in the real world, liquid markets. It looks like trading on Meteora.
Base and Solana.
Base and Solana. Okay, so on DEXs specifically. So I mean, I think that the details here of whatever you can share in sort of how you're making this transition, because I think that it is sort of this holy grail, the idea that you could have a liquid tradable token on DEXs that represent equity. I have some doubts whether that's actually what you guys are doing here. So can you maybe just detail out what is happening here? How are these tokens linked to equity? Is this a new issuance? I have open questions.
Yeah, there will be a new token. The current token can't be an equity token, and one of the reasons for that is that there are two ways that you can go about doing this. One of them is your token represents some equity, like RWAS. What I think we've seen with a whole bunch of projects where there's some SPV that owns the asset, and you have a right to that SPV partnership. The new model, I guess, popularized by Galaxy, is that the token represents actual equity. So you'll have an on-chain share registrar. The equity is actually the instrument that's on-chain. It's not a representation of the equity. It is basically the stock certificate. And that's the approach that we're looking like we're going to be going down. Okay. And one of the reasons for that is it feels more crypto native. It's far more exciting. And in order to go from an existing token to a new token, there's a plethora of ways that you can do this. We're always going to be exploring the most favorable ones to the token holders. Some of them are time-based windows. So you could have multiple windows that say you can transfer the token, and it's structured in a way where you have an equity sale, and your equity sale is a process that accepts the existing token for the new token. Right. So you're transferring it. One-way process. You can airdrop a soul-bound token that can be exchanged for the equity based on a snapshot of your existing token.
Okay. Yeah, I think the functional way of doing that on chain is less interesting to me than maybe the limitations that emerge as soon as you actually are playing with.
You're going to have to sacrifice. You're going to have to sacrifice some of, I think, the elements that brought a lot of us into this space, particularly on decentralization and anonymity. The token is going to represent real ownership in a US company. You can't be anonymous and hiding behind, an EOA that nobody knows who it is. Like,
do you need to be accredited to make the transfer?
You're going to need to, in some instances, in the US, you're probably going to need to be accredited, depending on the size specifically. Offshore outside of the US, regulatory environments are very, very different and somewhat more favorable. You're going to need to KYC. There's no way about it. You're going to need to KYC to make the transition, which is going to, I think, create this really interesting environment because the old token is still going to exist. And depending on the process of going from the old token to the new token, if there are multiple windows, what happens to the token in between the windows? We almost certainly aren't going to do an airdrop. And one of the reasons that we wouldn't want to take that approach is because if you airdrop the new equity to the existing token holders, it creates this really weird dynamic where it's like, do I ever want the old token again? Did I get it? Did it go to, I don't know, some staked address somewhere where I'm doing something random with DeFi to be
right?
Creates a right mess. So the window-based approach is what
right. So you can have these two assets, and those who maybe can't come through the KYC process or aren't accredited can kind of access liquidity on the open DEX sort of trading markets for Caesar. I am curious.
And that is a utility token. So the token right now, the existing one, is used to access the product. It is a utility token.
Will you see these two things living in parallel then? Or are you going to have two assets like forever?
Yeah, I think they'll, in an ideal world, they wouldn't both exist. Only one of them would exist.
Okay.
But once a token is out there, it's going to be impossible to make it disappear.
Right.
That's
I am curious about, so I had the privilege and challenge of being a part of one of the very first security token issuances back in 2018, 2019. And the critical error that we made there was that there is just zero liquidity in the security token exchange market. And I think that has improved, but it is still a fraction.
It's very difficult. Yeah.
So like difficult. What has given you confidence here? Because it feels like you're issuing a token into a market that just doesn't have any volume, and seems like that's not. I mean, you're making a bet on future volume. How are you sort of grokking the trade-off between liquidity and illiquidity here? Yeah,
it's far more difficult than a decentralized token where market makers can just come in and provide liquidity, because it's a security, right? Like 95% of market makers are not going to be able to touch that asset. They're not going to be able to trade it. They're not going to be able to provide liquidity. It's also basically impossible for the team to do so. You know, we can't openly trade our own security in the same way that we can say a DeFi token that is just a utility token. So because of this reason, I think most people who convert are going to be those who have significant interests in the company. So like massive holders of the token who, from a taxation perspective and from a regulatory or just I need to explain this to my CFA as to what the hell this 6-figure investment in this AI company means. And I'm happy to hold this for 10 years and take a risk on the company. With those guys, it will also open the door to some interesting token players like liquid funds and other VCs who, because of their LP documents, they can't hold the existing token, right? So they can hold the tokenized equity. It makes a whole bunch of sense for them.
Right.
And it's going to be there on the market for them to acquire. So if
what
you're
is
not
the market?
What is
like
the market? So
where will this trade?
I can't front run
Okay.
Centrifuge's announcement on where this is trading. Obviously, that's I guess bigger than us doing it. But yeah, they're doing some awesome work behind the scenes to make sure that it's not just going to be tradable on some little random website that inevitably has a DNS hacked and nobody knows who it is.
Intrigued.
Maybe share more on the, I guess, ecosystem that's emerging around security tokens. Like, are there kind of multiple venues emerging to be able to trade this? Are there DeFi products focused on security tokens? Like, what is that? What does the broader ecosystem look like?
I think the space as a whole is looking at security tokens now and saying, are these interesting? And the answer to where I think a lot of players figure out this is interesting, I guess if you take a step back, they can make a lot of money doing this, right? So there's a lot of money to be made, particularly in the facilitation of transferring of these things and the paperwork and the digitization. The net cost of this is going to be next to zero, and they're going to be able to charge some basis points on the transfers for sure. So there's a big financial motivation for people to be doing this. But at the fundamental sort of, okay, why is this interesting? It's crypto's chance to take a lot of that traditional funding market that exists, like post Series A to D, like pre-IPO funding. The secondary market for equity in companies that are highly valuable is massive. Mm-hmm. Tokenized equity arguably destroys that market more so than the IPO market or the fundraising market.
And getting rid of the layers of SPVs that people use today is going to be great.
Yeah, the fees on top of the fees on top of the fees, right? Like anyone could go out and buy some OpenAI stock right now, but my God, you'll probably be paying 20% in asset management fees to bloody get that ownership.
Oh, that's low. What I saw, 8% management fee and a 30%
carry.
Carry or something. One of those deals I saw recently.
It's crazy. So I think that's the market that the big players who are interested in. Look, we're going to have the biggest companies in the world want to be the platform that all of this happens on.
Is that alpha right there? Or are you dropping some alpha on
the big companies are going to be the ones. The big companies are going to be the ones that want to do this because there's a huge amount of money to be made in doing that, and also the middlemen here are going to have to be regulated entities. You already see that Centrifuge had to receive an SEC transfer agent license, and other institutions have to do something similar.
Okay. Wait, Josh, we got to
we got so many questions
in the waiting room here. So, I guess, can you give us a little bit of a sense on timing here for those of us that are interested in following this in minute detail, because we're intrigued what's coming up next?
We want to be done with the boring element of this in Q1 of next year. Like, let us focus on building the business. Let us focus on shipping a product that we have to figure out who we're selling it to and how much money they're paying us to use this product. So we're moving full steam ahead. And when we put the announcement out that we were doing this, it's on the back of 4 months of a lot of the legal work and setting that in place.
So when is Centrifuge announcing the trading venue here? Do you have a sense of that?
I have no idea.
Okay, we can ask them.
Well, yeah, we'll ask them. All right, man. Yeah, appreciate you jumping on. I saw this come across the timeline, and I just saw all these accounts out here saying Caesar equals equity and all this stuff, and I felt there was a lot of naivete and over optimism from folks there, which I think is true. Like, I think they are being a little naive and over optimistic given some of the hoops they have to jump through. But I do think this sort of two tokens and living there at the same time is going to create an interesting dynamic. And I think if you
need a company that's crazy enough to do it as well. And I'm very fortunate. I'm very
crazy.
I mean, I'm crazy, and I'm in a good position in my life where actually I think this is
crazy and fun. Fucking money he's got. So let's
I was like, this is
we like it, man.
Fun.
We like it.
We'll see how it goes.
All right, Mark. Well, yeah, we'd love to check back in with you, man, as you go through this. I think it's a fascinating intersection, and wish you well as you navigate the lawyers, the markets, and the timeline.
Amazing. Thank you for having me on, guys.
All right, cheers, Mark.
Peace, man.
Awesome. Thank you.